Hey, how's it going? This is Kian from CryptoBoost. Really happy to have you here with me today on the 4th of September 2019. So let's jump right into today's news video. So the global stock market's not been doing pretty well in August. Actually, it dumped 17 times Bitcoin's market cap. So it's been a very brutal month for investors across the globe. Global stock market shed around 3 trillion US dollars. There's been many warnings from an upcoming recession, trade war escalation, and so on. So 3 trillion is a very large sum, and that's 17 times larger than the market capitalization of Bitcoin and around 11 times more than the market capitalization of the cryptocurrency space. So that just shows how small the cryptocurrency space is, how small the market capitalization of all the cryptocurrencies are, and the market capitalization of Bitcoin. So just to put it into perspective. Now, the global stock market led around 3 trillion, and it dropped from around 80 trillion to 77 trillion with some important declines. Quickly, US Jones fell around 2% and German DAX fell around also 2%. So that doesn't look like a lot in percentage wise, but in actual valuation, it's a lot of money. Now, there are a few important factors that are leading to this drop in market valuation, and there are, for example, in mid-August, the US Treasury bond yield curve inverted, and that's a phenomenon that has accurately predicted every downturn for the last 50 years. So it's a very accurate prediction. Of course, you can't look at the past and expect to know the future, but very often still some of these signs, they come back and come back again. So they can prove to be a very good forecasting tool. So in terms of the inverted yield curve, the 10-year Treasury bond yield dipped below the 2-year bond yield. What does that mean? Well, basically now the 2-year bond yields, they give a better return on investment than the 10-year bond yields. And yeah, that doesn't make much sense, but the reason is because it's harder to find investors to buy the 2-year bond yields, because many investors don't know what the market is going to be in the next 2 years. That's why they're more hesitant to invest and buy these 2-year bond yields, and that's why you get more money back for the 2-year bond yields than the 10-year Treasury bond yields. And yeah, that's about it. So apart from that, there's also the China and US trade deal, which is also having a large impact on the market. So talking about futures and investments, VanEck solidx to offer Bitcoin ETF-like product to institutions. So first and foremost, it's important to know that these are not the same ETFs that everyone's been talking about. Until now, the SEC has still so far blocked a number of proposed Bitcoin ETFs. And yeah, this is something similar. It's not an ETF, but it's similar. So I'll get back to that in a moment. So now, VanEck Securities and solidx Management, which have previously had a decision on their proposed Bitcoin ETF postponed by the SEC. So that's the actual ETF has been postponed. And they revealed they're taking an unusual route by bypassing the regulatory hurdles. So what do they mean with this? Well, basically, they are bypassing something that's called the Rule 144A, and they're offering something like shares to qualified institutional buyers. So qualified institutional buyers, that's definitely not me, and probably not most of you. And basically, you have to have around 100 million US dollars in assets, and it's basically for big institutions with a lot of investments, qualified investments under their management. Yeah, and the shares will provide institutional investors access to a physically backed Bitcoin product that is tradable through traditional and private brokerage accounts. And the firms explained in a press release, the shares are the first institutional quality cleared product providing exposure to Bitcoin, enabling a standard ETF creation and redemption process. So hopefully this will pave the way for a real ETF-like product for you and me that we can trade. So one of the main differences between this like ETF product and the normal ETF, it's like this one isn't listed on a national exchange, and it's more traded over the counter, so not on an exchange, and that's one of the main differences. And also with this rule 144A, they can bypass the SEC regulations, because until now, no ETF, no ETFs have been allowed. Now, this qualified institutional buyers QIB only 144A Bitcoin product may pave the way for institutional Bitcoin adoption and showcases that an appropriately regulated ETF structure can work in practice. Yeah, unfortunately, until now, the SEC has not approved any crypto ETF. So wondering if that's going to happen in the next months, years. It's not sure. It's a bit unfortunate, but yeah, there's a positive and negative sides to this. Many people they believe that the ETFs will bring a lot more money into the market. Other people believe that they will cause more volatility and market manipulation in the market. But yeah, until we've got it, it's very difficult to foresee what kind of impact it's going to have on the market. Now, bitwala is a very interesting company, and they opened their bank accounts. They're offering bank accounts to 31 countries in the European nation. So bitwala is a blockchain company based in Germany, and they have unveiled a new application which will enable a European residents to easily open a German bank account through their smartphones. And I'm pretty hyped about this. Unfortunately, I won't be able to open a bank account through them because I'm in Switzerland, which is not part of the European Economic Area. So that means I won't be able to test this, but I still think this is a very interesting approach and happy about this. I'm using other smartphone banks. I'm also using Revolut, so I'm very on this hype train of mobile phone banking and this ease of use banking approach. So now, bitwala stated that the consumers in all the 31 nations of the EEA, European Economic Area, would have the perks of having a German bank account, which comes with Bitcoin buying and selling abilities. Now, there are, like, the Solaris Bank is the one that is offering these services and helping bitwala and creating these accounts. And the Solaris Bank is a fintech based in Berlin, and it has a German banking license, so everything is in order. Now, one thing I like is of course the ease of use that it will allow people to start investing into Bitcoin, because the onboarding process is super easy and super fast, and that's something they're proud about. And as soon as they've got an account, their everyday banking activities can be seamlessly integrated where in Euro or Bitcoin into their daily life. So you can start buying Bitcoin constantly and selling it and using it for everyday activities and so on. Now, it's not sure if you can have all your holdings in Bitcoin and pay directly. I would have to look that up, but nevertheless, I like the fact that they've got a very good ease of use and making it much easier for people to enter into the cryptocurrency space. Now, Christopher Ivanets, he's Chief Financial Officer, and he's also focused on a lot on security, which is very important. And he says that users' Bitcoins are directly booked for a multi-signature wallet on the blockchain with bitwala. That means hacking bitwala is as useless as breaking the blockchain itself. Very interesting, because security is very important. And yeah, I mean, until now, many people have been saying not your keys, not your Bitcoin, and so on. But to be fair, I don't feel like that's going to be. I think the problem with that is the difficulty, the barrier of entry to people that are not technical. So I think people that are not technical want a very easy to use solution where they don't have to think about keys, they don't have to think about private keys, saving their cryptocurrency safely. They want a solution that works, that's easy, that's secure, and only then will they use these applications, and only then will cryptocurrency become mainstream. Now, one of the big fours, and that's PwC, PricewaterhouseCoopers, and Luxembourg, PwC Luxembourg, mainstream financial and government institutions have begun embracing blockchain and cryptocurrencies, and PwC is one of them. So PwC Luxembourg recently announced that they will be accepting payments made using cryptocurrencies, including Bitcoin, from clients beginning from the 1st of October 2019. So I like that they are offering this option to their clients, just bringing awareness on the table. Fantastic thing. So they state, I quote, "We could not continue to invest in the field to promote it, build solutions for clients and support their transformation while not also being exposed to it." So very interesting indeed. Now, of course, they believe that the underlying technology behind cryptocurrencies will soon be a standard in the economy, and PwC plans to emerge as an early adopter. They've got a lot of clients, so I think it's a fantastic thing that they're allowing their clients also to pay with cryptocurrencies. And yeah, it's also to test the waters to see what's possible, and to also develop solutions to help consult their clients. So PwC Luxembourg also carefully reviewed internal policies and protocols to meet crypto industry standards, which I would expect nothing less from one of the big four audit teams. And they say upskilling will be the key, and the capacity to build and grow the ecosystem. And that will be at least as important to harvest the true benefits of the technology. Now, they're also building some other solutions. So they're building a set of proprietary PwC branded blockchain products, especially also for the auditing road. So this includes a crypto auditing tool that PwC International launched a few months back. And it's probably also going to be to help audit smart contracts, to audit cryptocurrency companies and so on. So I haven't read too much into that. I might look into it in detail, but yeah. All in all, really happy about this. I think all these positive news that's coming from different big companies, it's very good. It's moving into a direction. I think it's pushing adoption onto the consumers, onto bigger companies. And I think it's the bigger companies that will pave the road to adoption. Now, one company we're all familiar with, and that's Binance. And they already launched quite a while, phase 1 from their lending, and now phase 2 brings support for BTC, Ethereum, and Cardano. So on Wednesday, Binance launched the second phase of its crypto lending platform, Binance Lending. So now their tweet, Binance will launch a lending platform, 14-day fixed term USDT, BNB, and Ethereum Classic lending products available for subscription. So on the phase 1, which went live on the 28th of August, the lending products were Tether, Binance Coin, and Ethereum Classic. And in the second phase, they added 3 more coins, and that's Bitcoin, Ethereum, and Cardano. So here you can see a nice table with the different digital assets which you can use in the lending, the term to maturity. So after these 14 days, you will have this interest, which you see here on the right side of the table, per lot. So for example, if you buy one lot of 100 USDT, you will get after 14 days 0.3 USDT, and on a yearly annualized interest rate that would be around 8%. Now, 2 things that are important to take note with this lending. There's a total subscription cap. Now you might be wondering, what is a subscription cap? And basically that's how much lending of this certain coin is allowed at the moment on Binance. So for example, here for USDT, it's going to be around 20 million USDT. For Ethereum Classic, it's going to be around 20,000 Ethereum Classic. And now what do they mean with subscription? So basically you have to try and get a spot to be able to lend, and since there's only so much coins, for example, for USDT or Ethereum Classic, that means there's not going to be space for everyone. So some people will not be able to lend because the cap has been reached. And furthermore, there's also the individual cap, and that's how much you alone can lend on the Binance platform. So 1 million USDT, 1,000 Ethereum Classic, 500,000 Cardano, and so on. So very interesting. I'll link all the articles down below if you want to read it in peace. Now, As I mentioned before, we've got the first come, first serve format. So basically, if everything's full, you cannot be lending any money and you'll have to wait until spots get freed up. Not sure how that's going to be done if people get kicked out of the system. Not sure how they would do that, because I can't imagine people just giving up their lending spot. Now, Binance also launched 2 crypto future platform for user testing. So they're still in testing phase. And yeah, these 2 test platforms for its planned crypto futures product. So the Futures A and Futures B are the new test nets, are now open for users to play with dummy assets. And there's also competitions to encourage traders to get involved, and probably also so they can test the system and see if it's working well for the traders before they add real digital assets to it. So now, if you're interested in trading and using these platforms just for fun, and you can go into this competition, and Binance said it will award prizes around 10,000 BNB worth $215,700. So very interesting. Pretty happy that they're launching these 2 crypto futures platforms. So yeah, that was the news for today. I hope you enjoyed this video. If you've got any feedback, suggestions and so on, then feel free to leave it down in the comments below. I read all the comments and try my best to answer them all. I'm always very appreciative for the comments and feedback that I get, because that's how I can improve these videos. So if you've got something you really want me to talk about, then leave it down in the comments below. And if you want to stay up to date with these videos, then I appreciate a subscription. And if you want to stay up to date, then press that notification bell to help the YouTube algorithm. So without further ado, I wish you a fantastic day, and I'll catch you on the next one. Bye bye.